everyone. It is Evan here from the Trade Risk on Friday, May 17th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we're going to jump right into our market technicals dashboard. You can see we closed out the week on a down note. Major indices right across the board, all finishing lower by anywhere from 0.5% down to 1.5%, led lower on Friday by the Nasdaq and small caps. 5-day change numbers holding in red territory. We're still below the 10 SMA and now the 50 SMA right across the board, and we're starting to lose or test some of those 200 period simple moving averages across the major indices. If we scroll down a bit, take a look at sector performance, you can see it was semiconductors, which was the real drag this week, followed by financials and industrials. And on the upside, we had utilities starting to show its strength this week, along with staples and energy kind of hanging just in slightly negative territory over the past 5 days. If we go out to the major markets here, we got oil that is outperforming to the upside. Volatility, which is holding green now, TLT and the dollar. And on the downside, we have emerging markets. We have silver, which really started to accelerate lower this week, as well as China. So let's jump into the charts here. Let's take a look. Let's try and make some sense of this market, because it was a very mixed week of trading right now. There was a little bit of something for both kind of the bulls and the bears here. Ultimately, we did trek lower. We did find kind of follow through to the downside this week, but we did stage a rally off of this week's lows, and we did manage to close well off of those lows, giving us a little bit of hope there for the bulls as well. So when we look at this action here, you can see we did probe lower to start off the week. We came right down and tested that 2,800 level. That was the key sort of round psychological level. It was where we based out for many weeks here, a couple of months, in fact. Earlier this year, it was the highs back here from 2018, so it carries some significance with it. We came back and retested it. We bounced fairly sharply, and we closed above it, still in red territory. And notice kind of the tails here on both of the past 2 weeks worth of trading, which shows that there is some inclination. There are some buyers showing up here. There's some, you know, kind of angst when we get down and sell off a little too steep to revert back up and pop higher, but we're still in some short-term downtrends. We'll look at those a little bit when we go to the daily chart. When we look up here at the MACD, remember, this is freshly coming off of new highs here. So again, we kind of talked about this in last week's episode, but you know, I like when momentum is coming off of these new highs. That is generally speaking a spot or a point in markets where buyers are interested in kind of stepping in to support those bounces. And really the price action sort of speaks to that. It doesn't tell us the magnitude, and there's no guarantees, of course, in markets. It's all probabilities, but we know that we like this on the weekly chart, the fact that we have these fresh momentum highs here kind of pulling back, still firmly in green, you know, in positive territory here for the MACD. So that is encouraging to see, and some of the support above 2,800, or this initial support around 2,800, is also encouraging to see. So all in all, when I look at this chart on the weekly basis, this 2,800, that's the key area. That's approximately a 5% pullback. We've pulled off 5% from the all-time highs made 3 weeks ago, from highs to the lows here made this week. So it's a 5% pullback, and if bulls can kind of hold us above this 5% level and you know, base us out, keep us supported above it, I think that's a pretty good win given the magnitude of the rally that we've seen over the past 6 months. Of course, there's no guarantees of that. 2,800 though, that's the big level I'd pay attention to. 2,872, kind of the midpoint of the range, and then the highs up there around 2,942. Let's go down to the daily chart, look at things a little bit closer here, and you can see it's kind of a mess, and it really just sets us up for a mess heading into next week. I think there's a lot of cross currents right now, and I do think that kind of the same message from, I believe, the midweek recap from earlier this week is that less is more right now. Unless you're an active day trader that can really take advantage of these ranges, if you're kind of in that shorter term swing trading spot, this can be an easy area to get chopped up, you know, to get chopped up in, because you do have some cross currents currents. You got a little bit of momentum. You get those bounces coming in, but you still have trends to the downside. You have the MACD here on the S&P 500 in negative territory. It is trying to bounce, but there is some overhead supply here and resistance around that 2872 level. So really, again, for me, I like to see the dust, wait for the dust to settle, wait for a little more clarity out of this market. Right now, it looks pretty pretty indecisive here in these ranges. 2800, as we talked about, that's the lower end. 2872, that's the midpoint. Frankly, it's really Thursday's close or even Thursday's highs all the way up to 2895. You could also look at this as kind of a shorter term level right in here, just under 2900, as we have a couple of clusters of highs here over the past 5 days that the market seems to care about. So this right under that 2900 level, in between 2900 and 2872, and then all the way down to 2800. So that's sort of the way I'm looking at it. Sideways, we got this trend, this channel that is still heading lower, this trend that's still in the short term to the downside. We tried to rally Thursday, gave a little bit back Friday. So all in all, pretty messy, all things considered. Now, one of the things that did happen towards the end of this week is we did see the VIX really unwind this week. So we saw a actually, I mean, most of that actually happened last week on into Friday. I've got my days mixed up there. Friday was the big unwind. We popped back up on Monday. So we almost, recovered all of the, all of the unwind in the VIX that we saw on Friday came kind of roaring right back into the market as we traded up to 21 in the VIX, and then we proceeded to kind of give it back up into the end of the week. So once again, we have a VIX that's trading around 16, which is, I think, more or less around its long-term historic average. So this is sort of an average level for the VIX, but a lot of that, heightened fear that came into the market above 2022, that seems to have dissipated right now, and we're kind of hovering at a more sort of reasonable VIX, especially given the types of ranges that we're seeing right now in the market. If we go over to small caps next, I think this, which we'll switch over to the other board here, I think this is going to be the interesting setup into next week as well. We talked about small caps outperforming and kind of holding best in class for a number of weeks in here as it tried to break out and help fuel the market higher. It kind of failed there, suffered a little bit of technical damage, but still more minor compared to some of the other major indices. But now it's setting up in kind of an interesting scenario where it actually does start to favor the sellers a little bit more in the short term. The trend is lower, MACD still making new lows here, and we almost have what looks like a bear flag underneath what was support and is now resistance around this 155, 156 area. So next week, if we start to follow through and break down here in the IWM, it seems pretty reasonable to come back down and retest the 148 level, which is about where we bottomed out in March of this year, kind of the bottom end of this longer term sort of sideways range, if you will. And, that right now seems like the path of least resistance. Sellers kind of in control here in the short term. Trends are down, momentum pointing down. So if we do get that follow through, it's going to put some pressure on the rest of the market, and it does set the IWM up to be in a fairly vulnerable spot. To negate that, in my head, it just needs to reclaim really the highs here, or the most of the days trading from Thursday. If it can get back above, call it 155 to 156, start rising back into this range up here, that would be a good save. That would be some good short-term confidence that buyers are in fact stepping in and preventing further breakdown. But until and if that happens, I think you have to be a little bit cautious here now in the small caps heading into next week. Finally, if we go to the Nasdaq 100, you can see very similar to the S&P 500. It's really pretty messy territory here. It's in this short-term downtrend. It popped nicely Wednesday and Thursday, and then it basically struggled here on Friday as it traded back down through and closing at the bottom end of Thursday's range, back towards kind of, rolling back over sort of in this short-term trend. 178, that was where we found support. That was approximately the March lows here in the Qs. That's where we're going to want to see hold. Otherwise, we have a trip down to 170 or so as sort of the big next kind of pivot area to pay attention to if we start breaking down and following through to last week's or this week's lows. So that is the market environment overall. A little bit of everything for, a little bit of volatility, something for everyone. You can kind of spin the narrative whichever way you'd like, which is, in my mind, one of the more dangerous markets to trade because you can just get chopped up so easily. So know your time frame and, be willing to to be patient. I think that pays in this type of environment. So let's get into some of the other major markets here. We'll go to TLT. TLT rallied on the week 1% to the upside, kind of extending the recent rally and retest off of the breakout area from March. If we go back down to that daily chart here, it's still kind of marching up in an orderly fashion. There's not a whole lot of momentum. I mean, the momentum on this move was much more fierce. This is much more gradual up here. So it'll be interesting to see if we can continue to hold and maintain. We still do have our long position here in TLT coming into kind of the first target area or the first spot to kind of pay attention to, which were the prior highs up here. So we'll see if we can achieve those next week for our trade. But we do still have that long position looking for higher prices in TLT. Next up, we'll go to Energy, USO. Still mostly moving sideways, but trying to inch higher towards the back half of this week, 1.87% to the upside. You can see right back to the top end of the prior 2 weeks range. We had this nice orderly uptrend going for the course of this year. We broke down a couple of weeks ago, and then we just continued to go sideways here. So encouraging that the USO is trying to lift up here, MACD trying to go back into positive territory. That does help sort of stabilize equity markets as a whole, and that'll be continued to be an important one to watch. This nice tight sideways range, we'll want to see if we can continue to hold up above it and start to break out next week. Next up, if we go to natural gas here, didn't do a whole lot this week. It closed very much flat. Range was very tight this week. Basically traded, in between this 22.50 and 23 area for the course of this week. It's getting nice and tight here. MACD moving back into positive territory. It's enjoyed a kind of a nice bounce here, put in some type of higher low just a couple of weeks ago. So be interesting to see if the bulls can kind of keep this trend alive. Longer term trends are still pointing downward here in natural gas. So I think we're starting to get to that cross current point where short term trends are higher, rallying into the kind of declining trends, and now we'll see who really can win the battle here for natural gas. But volume drying up, range is drying up, so watch for next week for some expansion in either of those cases. Lastly, for major markets, we'll go to gold. GLD here closing down on the week minus 0.65%. That was after a very strong start to the week. We had this big gap up on Monday, which looked quite encouraging here for GLD, given the fact that it really kind of spring-loaded back above 121, kind of came back up into this prior range up here for the course of this year, but then it really just went sideways and kind of drifted lower, could not hold into those gains into the end of the week, and then closed back below 121. So this was a bit of a fail here for the bulls this week. They had the progress, they had the momentum, they had the sort of cause here to try and rally us and start to, break gold up in a longer term trend, but it failed, and we're back down to where we've been chopping around for the past month or so. So kind of a disappointing there event for the bulls. We'll see if they can reclaim and pick things back up again next week, but all in all, looks a little pessimistic here in the short term. And really, when we look at silver, I think this really speaks to the issue at hand. Is silver accelerating lower, breaking to new lows here on the year, and convincingly falling and rejecting this $14 area that it just broke below a couple of weeks ago. So silver looking pretty ugly here, minus 2%, minus 2.31%. I mean, you could argue it's still kind of just falling in the same old channel here that it's been in for the past, many weeks now, but it is very convincingly below this $14 area. So for me, I would not want to touch silver until it's back over 14. Otherwise, I'd be looking at 13, the November lows, as a potential retest here for silvers in the coming weeks or months. So that covers the major markets. Let's go to some of the sectors now. We'll sort by top performing and bottom performing. If we look at the top performing, of course, we have XLU here, which is looking like a nice potential kind of breakout here of this multi-month sideways channel that it's been in. We found a quick move from the bottom end of this range back up to the top end of this range, and we'll look to see if utilities can get rotation and a breakout above these multi-month highs here next week. But testing resistance, we'll see if we can get that follow through. IYR, also the second best performing now this week, and also coming back to kind of challenge these prior highs here. If we zoom back in, you can see we're right back at the highs from April. And you can see didn't quite get the breakout, but we're inching back to the top end of this range after kind of a double leg down here, kind of a higher low. We thrusted lower, rallied up, put in some type of higher low, and now we're back to resistance. So it'll be interesting to see if we can get a breakout here, but it's pretty fueled up. And you know, the volume profile, though, I still got to say here for IYR is you know, much to be desired for the bull case. Just take a look at the 20-day volume here, and basically every tick you see over the 20-day volume in the IYR, it's coming on down sessions. So you know, by classic technical analysis here, you're looking at down days or heavy distribution days on the downside and lighter rallies on the upside. So if that's something you put a lot of weight on, it is something to note here in this pattern as it consolidates. Maybe gives you a little pause there on chasing a breakout in IYR. Last but not least is XLP. This is Staples performing third best this week in positive territory. Not quite all-time highs, but still closing pretty well here and starting to lift above some of this prior shorter-term consolidation. Doesn't look entirely, you know, actionable there, but some of the names individually under the hood here are where you're going to find some smoother rides for the staples. Now, on the downside, it's semiconductors down 5% here, continuing its pullback. And, you know, of course, we had this epic run here in the semiconductors from the January lows all the way up to their highs made just a few weeks ago. Semiconductors were up 50% from low to swing high here, and now we have approximately retraced 13% of that. So still, you know, from a percentage ratio basis, we still haven't retraced a tremendous amount given the magnitude of the move, but there is, you know, still now starting to do some damage. MACD still kind of treading to lower territory. Volume's been heavy here, so it's a real tough one right now to want to just jump in buy and blindly buy. I think we do need to let this settle in a bit, and maybe the lows here from March will be where it can start to settle in around $104. We'll have to see next week, but right now we're still seeing a bit of an exodus and pullback here in semiconductors. Financials, second worst performer this week, but this to me looks more, slightly more encouraging in the sense that we are kind of back testing this 2650 area breakout. I think this is going to be an important level to hold for XLF bulls because this is where a lot of prior supply was. This is where a lot of prior support was back in 2018. And I think it's really just in the best interest here for bulls across the market, across financials specifically, to hold in around this area, 2650 or above. So far, so good. We want to see that MACD stabilize a bit, price action stabilize a bit, and we'll see if we can start to get maybe a reasonable spot to maybe get back involved in financials for some type of retest pullback trade. Last but not least is industrials, third worst performing this week. Really not a whole lot to say. It's still pretty messy here after breaking down from really the $77 area. It's been kind of pulling back here. Probably wouldn't be surprised to see it kind of retest more convincingly the March lows here around $73. It's still holding above them. MACD still in negative territory. So for me, looks like a pretty messy spot here with an edge to the sellers. So that is the recap for this week. As always, thank you so much for tuning in and watching. Hopefully you had an okay week trading, a great week trading, and we'll see you in the next episode. Don't forget to subscribe to our YouTube channel if you like these videos and want to stay updated. Have a great weekend. We'll talk to you next week.